Which brings us to my final and third step tonight. Allowing home prices and sales to correct on their own. No more government, mortgage modifications, tax credits, and other forms of disruptive housing stimulus. Here to weigh in, we have John Taylor, President and CEO of the National Community Reinvestment Coalition, and Anthony Sanders, real estate finance professor at George Mason University. Tony Sanders, let me start with you. You know, after homebuyer tax credit 1, homebuyer tax credit 2, mortgage mods, delinquency bailouts, unemployment, refis, and all, God knows how many billions of dollars we've spent. Home sales are still plunging. There's a huge inventory glut. All that threatens another price drop. I mean, I just want to know your view. Maybe we'd have been better off letting the market run this thing.
Well, let me start off with this. Back in 1997, the Fannie Mae CEO, homeownership rates were at 66.8% and said, let's really go for it. So fast forward to 2006, after over $5 trillion pumped into the housing finance system, you know where our homeownership rate is today? 66.8%, according to the census. The point is that in that interim period, we've had an enormous bubble, which everyone was very happy with, well, stayed bubblish. But the aftermath has been like the Hindenburg. It blew up, and it's hard to pick up all the pieces. So what I would like the government to do is, A, rethink what it's doing, but B, to go away. Don't go away mad. Just please go away.
So, John Taylor, do you agree? Is it time for government to get out of the way of a housing recovery, John?
I don't know. I think we have a pretty good government. I think, you know, Larry, you're the Pied Piper of the free market, but you know, it's the free market that got us here. I mean, I don't hear anybody trying to call for an end to the free market or end to Wall Street. But look, you know, these guys went in, they did all sorts of bad loans. I mean, you just pointed out, as the professor just said, we didn't really have a net gain in home ownership, but that's because most of the lending that was going on, these bad loans that got us into trouble, were done as refinances or to existing homeowners to get a bigger home or add a wing, or, you know, there were all sorts of reasons, but it wasn't to really create new home ownership. That's why when your previous speaker, Mr. Pinto, talks about, oh, it was all about the affordable housing goals, this wasn't that at all. There wasn't this vast increase in affordable housing. It was really just a lot of stripping of equity by unscrupulous, unregulated people in that so-called free market of yours, who are free to exploit and free to do whatever the heck they want. And this is what we got.
Tony, what's your response to that?
Well, again, this sounds like a replay of our testimony in the House. What I want to say is that when the Obama administration first came into Washington, I went and gave a presentation to the Treasury saying, look, here's the problem. We're going to have unemployment at 10%. We're going to have house prices declining probably back to about 2003, 2004 levels. It's going to be a mess with negative equity. There's nothing you're going to be able to do that can successfully actually correct the problem. No loan modification program is going to work. Although you're very well intended, they're just not going to work. You're going to flush money down the drain. They're looking, HAMP 1, HAMP revised, the new one. None of them will work because, again, it's unemployment. It's negative equity. Those are hard problems to overcome. So all the money we push at it doesn't do anything.
Well, it's unemployment now, Larry, but at the beginning, this was really about just trying to fix a bunch of bad loans that shouldn't have been made in the first place.
Yeah,
so,
a lot of those loans were mandated. See, a lot of these credits.
No, there's no
Pinto
mandate.
makes a great point. You can't. A lot of these, we weakened all the links between ownership and responsibility. And my fear now, John, is that what we're doing is we're postponing the market's equilibrium. We're keeping renters from buying because the prices haven't adjusted. We're subsidizing bad behavior. I mean, that's what troubles me about the government's invention. I think the government has made this story worse in the last couple of years.
Actually, you know, if the government hadn't stepped in and frankly not allowed the banks to collapse. I know there are people in the free market who would argue that, well, we should have let the banks collapse, and you know, we really would have seen what you wanted, which was a total collapse of our economy, probably a depression rather than a recession, and we would have seen, rather than 3 or 4 million people in foreclosures, and let's face it, foreclosure is the mortal enemy of the economy, of the free market. It's what's driving down and has been driving down. Now, it has been displaced by unemployment because, I mean, I'll I'll say the professor's right about this, that you know, the HAMP stuff hasn't worked anywhere near what people hope for, but that's because it was voluntary. It's still up to the free market to be willing to participate.
And the tax credit hasn't worked, John. The tax credit has stole a little bit from the future, and you look at the last month or two, and it's been a disaster. I mean, the net benefit is gone. Housing inventories are up. I mean, this is what troubles me. Tony, I just want to ask you here. I mean, look at, this is not a small thing. These places in Southern California, like San Diego County, they have allowed foreclosures to occur with very little government interference. The west coast of Florida. And what you see is, as that foreclosure rate, once the foreclosures happen, sales are now rising as prices adjusted lower faster. This is, to me, what we should have done nationwide. I'm going to give you the last word.
Well, absolutely, Larry. I think the more we let the private sector handle loan foreclosures, the faster it weeds through, housing prices adjust, and it comes back. The more we have moratoriums, government HAMP programs, and the new one, the more we slow down the market, and we end up with sort of Shaun of the Dead type housing market. It's just dead, and it's not going anywhere.
All right, I'm going to leave it there, gentlemen. Thank you very much. John Taylor and Tony Sanders. We appreciate it. Up next on Kudlow.